Good morning, everyone. Welcome to Trading with Larry. I'm Eric Shamilov. Larry's not here yet. He may join, and we may get Clint on as well. But for right now, it's just me, and hope everyone had a great weekend. What's up, Clint? You're on. We're having technical difficulties this morning, but I guess everything's okay. How was your weekend?
Not a good way to start Monday, right?
It'll get better
Good,
from
good.
here.
Just
If this is the only bad part
had
of the
a
week, I'll
nice little
take
check
it.
in. That's right.
So we have a gap up this morning. S&P 500 is going to open up sitting right at that 50-day moving average, which it broke through last week. We've had ourselves a pretty weak July so far. The market wants to come back here right at the 50-day on the S&P 500, and the trigger was a 3-day halt in hostilities in Iran. So whether or not that's short lived or if this is a prolonged ceasefire remains to be seen. But every single ceasefire, every single MOU has been broken so far. So oil down pretty big this morning. But we have ourselves a pretty interesting week ahead. We have the Fed coming up, which I think is going to be an interesting one. Let's just check in on the odds for a rate hike on Wednesday are currently at 33.7%. I was shocked last week early when I looked at those odds and they were above zero. We had those CPI reports. We had the PPI come in a couple of weeks ago. Yeah, I think the market found some comfort in those numbers, and here we are with this meeting live. So that's out there. We're in the middle of earnings season. Google completely crapped out last week, as did Tesla. I saw your podcast here. You mentioned Google a lot, and I'll let you talk about that. Well, one thing about Google that I noticed, I think a lot of people were talking about as well, was how much capital appreciation seeped into that EPS number from their investment into SpaceX, into Anthropic. So I want to get your thoughts on that. And so, what do you think? This meeting is live. You think this ceasefire will be ongoing? Oil is down pretty good today. Is this a buying opportunity? That's something I'm looking at today to get back into. Let me know your
I,
thoughts.
I think probably the opportunity to buy oil was last night, right? I mean, first of all, I can't believe like we're going to fall for this again. I mean, how many times have we seen this exact thing play out over the last couple of months, where it's rumors of a ceasefire followed by a ceasefire followed by no exchanges for a couple of days, and the thing completely falls apart. So I mean, this is getting kind of old at this point, and I wasn't shocked by what the futures reaction to the news. Futures have been beat up pretty well, over the last week or two, and so I think everyone was just, would grab onto anything for a catalyst for a rebound, and that was clearly it. I think really the most surprising move of all to me was the pullback in oil. I was surprised that oil had that sharp of a drop, but you look at where oil opened at last night and where it's at right now, and we've retraced a lot of those losses. So just again, given
Here's
how
the
off.
oil. Here's the oil chart, by the way. And you're talking about potentially going in. It was trading in this range all of last week, all to the upside. Every dip was a buy. Now we have this gap down on the news. You do a measured move on the range, and pretty good support level potential here.
Yeah, well, one thing I would note is, like, ever since hostility started again, ever since we started July, oil was at $69 a barrel. Now it's at wherever in the high 80s. Oil's tracked higher, interest rates have tracked higher. So if I'm if you're watching all these knee jerk news this morning, you're watching the knee jerk reaction in stock index futures, you're watching the knee jerk reaction in oil. Those are going to be the two areas that people are most fixated on. I would watch the knee jerk reaction in interest rates right here. I think that's going to be a big tell because on both the long end and the short end, um, we were actually I wrote up a research piece that's going to for Larry that's going to go out today for Larry's free e-letter to subscribe to, just talking more specifically about rates on the long end and how the 30-year is starting to poke above this 5% level again. We had kind of a false breakout above that level back in late May. Now we're taking another shot at it. So I would watch that this morning, to be honest with you. I mean, of all the reactions happening across the market this morning, that's the one I would pay most attention to. Is if we hold above that 5%, if it's another false breakout and we pull back right away. I think the bond market is probably going to do a much better job at looking through the headlines, so to speak. And if they're buying that, there's something durable here, some sort of lasting peace deal that gets oil back down, that gets inflation under control, I think you see yields pull back. If you don't see yields budge, they're not buying, this development over the weekend. So that'd be my take. Watch rates, and the other end of that too is on the short end of the yield curve. You talk about the odds for a rate hike. I don't think anyone's really expecting the Fed to do anything this week. Those odds have bounced around a little bit. But what I think is most notable is that you've seen slowly two rate hikes creep into this year now. So if you look at the probabilities, and I'll try to pull these up really quick so everyone that's watching knows how to follow along with this. But if you go to this is a free thing to look at. This is the FedWatch tool from the CME Group, and this just has for all the upcoming Fed meeting dates probabilities based on Fed funds futures for each range of where rates could end up at. And this blue, what's shaded in blue, is kind of your highest weighted, probably your central tendency, so to speak. And so, no, we're at 3.5 to 3.75 right now. So expected to be there this week. But then you see a jump in September and then another jump in December before staying there. And that's notable because this jump in December used to be a jump in March or April next year. Now they've pulled that forward. So I think, again, this is something where if you want to follow, we get on here and we talk about these probabilities. If you want to follow along, this is how you do it with this tool. And that's been the most notable thing happening on the short end, is that this has been getting pulled forward. It looks like we got another guest.
Hey, what's up, guys? Sorry about that. I had a little trouble logging on this morning, and I'm actually in a business office. I actually have good views, so if I could show them, there wouldn't be a door. But you guys are talking about the Fed, obviously. Big week for the Fed.
Big week for the Fed, Larry. And do you think any of the weakness that we saw in July in the Nasdaq and in the market in general has accounted at all for interest rate hikes, or was this all rotation? Was this all fear of competition from companies like Moonshot? You think the market is pricing in any fear about rate hikes?
You know what? I mean, you could use that as an excuse. No, we've been on the podcast every day this month, pretty much, and we're saying that the market wasn't looking at the Fed. Every day we were surprised. Nasdaq's up 2% basically today. It probably wipes away half the down move of the month. The big question is, I guess, is the Fed going to move? And I'm in the camp of no. I don't know where you guys stand on that. I know odds are high, but I'm in the camp of no. Only because I think he could give himself some time, and I think it's going to be I think we're going to have a really weird Fed meeting. I think we're going to have potentially no move and no commentary, zero commentary. Okay. And it's something that we're going to have to get used to moving forward. I don't know how you guys feel on that. I don't know. It would be interesting to hear both your thoughts on where you think the Fed is going to be on this 2 day meeting, ending up, I think, on the 29th.
Yeah, they're probably not going to raise. I think also Trump and the administration are cognizant that there's a Fed meeting this week, and I don't think they would want oil going to 100 by Wednesday with continued attacks in the Middle East. So
So
uh,
you're actually at the belief they shut the war down because the Fed's meeting this week.
I think you got to think that there was a thought.
No
Uh,
thought.
no, okay.
I don't think so. I mean, literally, I guess you guys were touching on it, that the Fed, has rate hikes built in all around the curve here, right? So what does it matter? What do you think they're going to do? That's really the question. Are they going to raise or not?
Not this week. I don't think this week.
What do you think, Clint?
Not this week, but here's what I thought was interesting: is if you go back to the last meeting, Warsh's first meeting as the new Fed chair, he already put the hawkish surprise out of the way. He came across in the meeting as being much more hawkish than what anyone was expecting. So I mean, he's definitely set the table, so to speak, for potential rate hikes, despite all the pressure on him to cut coming into this. And I think if I think he was trying to maintain the Fed's credibility by doing so. And I think what was interesting coming into this meeting until recently was that you had the big pullback in oil prices going into early July. And then you had this really, I don't call it soft, but I mean a softer than expected June CPI report. You had like the 0.4% month to month drop. I mean, it was the biggest pullback in CPI since 2020. So it looked like all these things were coming out in favor for him to maybe start to go the other way. But now with what oil is doing, with what rate markets are doing, it's I think he here's the thing, like he's talked about being very data dependent, right? And he has sort of this macro view of the world from working with Drunkenmiller, so like, he's watching things like the 2 year yield. I have to believe. I mean, he's watching inflation break evens. I have to believe. I think he's seeing that. There is a problem with the Fed's credibility if they come out and they think they can try to cut interest rates when the market is actually screaming that you need to raise rates right here. So I think he got the hawkish surprise out of the way last meeting. I would expect him to maintain sort of a hawkish bias, but not paint himself into a corner, so to speak, of having to do anything, because now we buy time until September to see how things evolve.
But let me ask you this though: why are they pricing? I don't know what the odds are, but when we were looking at it mid last week, it was in the 30s, right?
It's still in the 30s. It's only a 37% chance that they hike in this meeting. But what the big change has been, a hike was expected in September. Now another hike's being priced for December. So a hike that was expected next year has been pulled forward to this year. And as that's happened, as you've seen the 2 year yield make a new high this year.
Yeah, well, I think it's definitely pricing in moves. Again, it's going to be interesting because let me tell you, I think the ball's play would be to raise rates. I mean, it's the right play and the ballsy play, but we got to see and this is, what do you call this? This is his defining moment so far, right? Because if he does raise rates, listen, it's like when you'd be a kid and you go to the doctor and you'd be so scared of the shot, you'd run out of the doctor's office, and then you get the shot, and then 10 minutes later you don't realize you got the shot. So it's the same thing here. If he does in fact raise rates, I do think it's going to be adverse to the market, but I don't think it's going to be something that's, he's going to raise rates and the market's going to collapse. I don't see that. I think maybe over time, listen, he's walking. I literally was looking at this over the weekend. In 2016, there were no $1 trillion stocks. Okay. None, zero, not one. Okay. Now I was just looking at market caps. I'm in shock. Apple 5 trillion, NVIDIA 4.5 trillion, this one 3.2 trillion, Amazon, 2 trillion, it's, I think you know, he's walking into a minefield of overvaluation. I mean, maybe I'm wrong, and I think that he knows it. And the money that's been made in the last 5 years is off the chart, right?
So if they're not pricing in a rate hike and he raises rates, why wouldn't the market just collapse? Like you don't think the
Well,
market
they
would
are,
collapse if he raises this week?
yeah, but they are. Clint's saying they're 1/3 a chance. If they weren't pricing anything in, it would be at zero. They're pricing in. Wait, listen. If you don't think they're going to raise rates, you should do the Fed funds future trade. You'll make a crazy amount of money. And like we have a product that we trade prediction markets on Kalshi, and we can look at that and we could place that trade um, if they have it. So I think the market is more convinced than the three of us. I'm not saying it's going to happen, but I think looking at the broad market, because I guess we're macro Monday, right? So looking across the board, a market that's surprising me, that's really had what I call the giddy up in it for the year, is the Nikkei. And the Nikkei was slightly higher last night, but nothing of what you would think with quote unquote, the end of the war for the 18th time. I would have expected more strength there, but we do have strength across the board. DAX is up, 1.5%. So, we're sitting here, but, my thought is, listen, I told you, and I believe this, that we were bombing sand and we weren't doing any damage to anything, and it was a waste of time. And these guys are bad actors, and they're the same bad actors that they were before. Now they're going to hold us up again. They're going to refuel their drone capacity and everything else, and then they're going to hit a ship in, wherever. Either the Strait or somewhere the Red Sea, and the whole thing is going to start up again. And it's going to be 2 days, a week, whatever time they need. We're just giving them time to reset. And Trump wants out of here so badly that it's scary. So, for a macro Monday, you have Asia up small, you have Europe up a little bit more, and the, you know, the market here is bouncing slightly, but I don't know. I'm not so convinced. Look at NVIDIA. It barely up today. And didn't they sign over the weekend like a $500 trillion deal with Hynix?
I haven't gone through the fine details of the article, but there was something on Bloomberg about Nvidia's another round of $750 billion financing, and stoking fears of this whole AI trade just being one big circular reference of these companies putting money into each other, not really creating any value.
Well, you saw that with the Google earnings. They reported a huge EPS, but most of that was stock appreciation on their SpaceX and Anthropic investments.
And that's what I don't understand. Like, so they're coming out, they have big positions in, OpenAI or Anthropic, and obviously SpaceX. Where are they how can they even value SpaceX? Like, are they valuing it where it went public? Are they valuing it on the high? Are they mark to market? I doubt it. And that stock has fallen in half. So, the bottom line is, if you're incorporating that into your earnings picture, it's probably not that good, right?
Yeah. Well, the market took that outright. Google was down quite a bit on earnings.
No, I
By the
thought it
way,
was
anything
really
with Google
I
is
thought it was they were upset about the CapEx spend. They upped it again. I think that once they were on the conference call and they gave away the CapEx
yeah,
spend.
they want to win the AI race at all costs, which means capex to the moon.
Yeah. Well, I don't know. I don't know what the race is yet, so we'll see. Obviously, I don't know if you guys touched on oil. Obviously, that's
Yeah, we talked
still,
about oil. We think it's a good buy here on this dip.
yeah, I don't know. I'm not so convinced. I don't like oil only because, like you said, Trump, uses it as a tool. I don't know. I mean, I just think Trump wants out of here so bad. He can't win. So he's looking for any excuse to get out. That's what I see.
But back to the macro picture. We're talking about rates affecting stocks. I don't think stocks have been at all even contemplating what the rate picture is at all. I feel like the macro situation is traveling on its own lane on the highway, and you have the stock market going in its own lane, basically trading off of AI rotation every 72 hours and just fixated on the new narrative, which gets flipped every couple of days. But you know how on the highway you have like that merge up ahead sign? I think we have that sign here. And I think these two lanes are going to converge pretty shortly. So that's how I see it. I don't think stocks are at all reacting to this. I think they're just, the macro is reacting off rates, and stocks are just reacting off rotation. At some point, these lanes are going to converge.
I'm picking up a little pattern. I don't know if it's a 2 or 3 day pattern, but like overnight when the market opened, I was curious to see what we would get, and we got actually more than I thought, but it was mostly Nasdaq. Okay, overnight, like the S&P was up 46, Nasdaq was up 400. Now the Nasdaq's up 373 and the S&P is up 63. And if you go back to Friday's action, the S&P actually closed higher with the Nasdaq down almost 300 points or percent. So I'm seeing a little of that, and it's almost like I talk about this a lot. The S&P is like a utility stock to these people. It's the craziest thing. They think buying S&Ps is like buying like AT&T back in the old telephone, Mom Bell, paying a dividend. Like I feel like in the S&P it feels safe, and the Nasdaq is like trading like crack. But
I,
I
Let me I'll share let me share a chart of the Qs really quick that track the Nasdaq 100. 'Cause this was something I talked about on Thursday on the podcast, and it was a decent trade setup, and we saw this follow through. But I mean, here's the Qs. Here's one thing I would note. I mean, we very I would say quietly have pulled back almost 10% from the early June high. So Qs peaking out close to 750
Yeah.
in early June, and through Friday, we're down almost 10. I think it's a little over 9% off that high. So that's worth noting. The near term setup was you had this triangle continuation pattern. We broke through it last week, and what I talked about on the show on Thursday was how it's common to see price come back and test these levels before rolling back over, and that's exactly what we had. So price came back, it retested that lower trend line, and then we rolled over again. And there's Friday's price bar. And basically, if you look at the action this morning, it's nothing more than just a retrace of Friday's price bar. I don't think it's taking out the Friday highs yet on the Qs. So that's one thing to watch, is just that you've got this continuation downside pattern in place, and we saw what the reaction was to Alphabet and Tesla earnings last week. This week, I mean, you look at the calendar. I mean, this week is just jam packed full of earnings. So, that one thing to really watch is, does the market, continue to punish sort of this AI CapEx spend, despite what's happening today, despite what's happening with the headlines. That's going to come back into view once these companies start reporting earnings again.
agreed, and it's even a clear pattern a little bit this morning. Same thing. A little bit of relief in the bond market. Bonds are slightly higher. We haven't seen that in a while. I do think yields are going to keep ticking up. I think the undercurrent here coming into the, the meat of the second half is going to be much more interesting. As we're last week of July, okay, and August is coming, and August, like I think June and July could be, you know, generally, mellow or mellower type months. I mean, once we get in August and September, it's rock and roll. So it's going to be, I think what's coming forward is going to be very, very, very interesting. I
Well,
looked
what do
at
you
this.
mean? July is usually one of the probably the most bullish month of the year. July, November.
Well,
Uh,
but Eric, you gotta look back at the last week of June and the last 2 days where the Nasdaq ran 5% and the S&P went from down 3.5% to unchanged in basically 2 days. So I think a little of that move happened in quarter end, okay, for the end of that quarter. So I think especially in Nasdaq a lot of that move came into, I mean, if you go back and pull a chart of the last 2 to 3 days of the month, they retraced the entire move of the month from being a decently down month to being flat. And we're really just, especially in S&Ps, just having that down month this month. So yes, traditionally, July is usually up. But I think a little of that was taken away because of the end of the quarter markup, and they marked the quarter up. Did you guys touch on the straddle at all?
30. What is it? 30 points. That's it.
Yeah, it's a joke.
It's
It's
a
very,
30 points. I actually, I would say, I would put on, I would sell that straddle with a short Nasdaq position over it. Is how I'm thinking about today.
yeah, I just think we got to see the opening, see how everything goes. They may turn the knob on the opening where they rip up Nasdaq and leave the S&P. I mean,
Well, the Nasdaq
the
had all night to extend the gains from the open, and it hasn't really been able to do that.
I was up at 4 in the morning, unfortunately, which is 2 in the morning where I'm at, and the Nasdaq did make a new high overnight at about 4 a.m. And then has slowly been coming off as the S&P. S&P is about 10 off the high. Nasdaq is about 100 off the high. So, they're kind of tracking a little bit. I guess you know, oil looks interesting. It probably
Well,
was too high at 90. I didn't really get into the crux of why the market's so happy that, there's not a ceasefire in place. Am I missing something? They just, we stopped bombing them and they said they would stop bombing us. Right.
All
So,
right.
so
It's
I told Eric, at the start of the show, it's like, are investors really going to fall for this all over again for the 10th time? Um,
oh, oh yeah.
I
Clint.
have I got one question for you guys really quick, because the theme of the show today is Macro Monday, and I mean this is just a huge week between the Fed and all the earnings reports coming up. So my question to you guys is this: on Wednesday we'll get the Fed meeting at 2 o'clock. They'll come out the meeting statement, and assuming things are going according to plan, Warsh will be out talking. But then after he's done, you've got earnings from Microsoft and Meta among some of the other big hyperscalers that are reporting this week. Amazon follows up the very next day. Or a viewer actually wrote in a question asking about ARM, which is one of the semiconductor names. So that trade's been under the microscope lately. So my question is this: for this week, what matters more for the market? Is it what the Fed does on Wednesday, or is earnings from these hyperscalers going to be the bigger driver for the market?
You want to take it, Eric?
Yeah, I think earnings. I don't think the Fed is gonna set off the fireworks this Wednesday. I don't think they're
Well, I think it's probably earnings, but I'm telling you, there's something sitting in the back of my mind that this guy may do something
that would be
outside.
fantastic. That would be fantastic because we would have a huge move. I know
You
you don't
think
think we're
so?
going to have a move, but I don't think the market is ready for a rate hike this week.
I know
Really?
he like you can tell he wants to catch the market by surprise. Like that's been his whole thing since coming into it. He wants to catch the market by surprise. And the way you catch the market by surprise is hiking rates. But I can't imagine he does that yet with how much pressure he is under, the circumstances surrounding his appointment to come out and cut rates. I mean, you're not going to cut rates, but I don't see how in the world without, stoking some anger from another person that he can come out and hike rates right now.
But you know what I'm thinking? I'm thinking maybe he really wanted him for the job. And literally, he went to him and said, listen, we may have to raise rates, but that'll get us to the point where you can eventually take away inflation and really lower rates. And maybe he gives them the pass because, listen, every meeting that Powell had over the last 2 years, Trump went ballistic when he didn't cut rates. So the first meeting that this guy had, Warsh, okay, he didn't do it, and Trump was fine about it, didn't say a word. So I think it's a different regime. I think he's told him what he needs to do. Listen, if it wasn't the case, they wouldn't be pricing so much in forward that he was raising rates. They don't have him cutting rates at any level, right? So it'll be very interesting, but it's going to be a great week for trading, a great week for the market. It's going to be very interesting. A lot of these stocks, like Microsoft, again, it may hold. It looks terrible on a chart. Terrible. Looks terrible. I mean, it could go much, much lower, I think. Now, again, obviously that has to do with earnings and whatever, but I just think companies are being forced, great companies are being forced to do things that they don't want to do to keep up with Meta, NVIDIA, all these crazy companies that are spending. Like, listen, let's talk about, one stock that I actually love trading and I actually like a little bit to the long side. That's up 3 already this morning, is Oracle. Oracle put itself in the worst position. They're spending more money than they can ever make or have. So, this is what we're seeing. So I know we're getting close to wrapping. So I want to throw it to you guys to finish us up today. But I'm just looking at a lot of these stocks, and the high in Oracle was $335. The stock's 100. That's a whacking, So
CME futures coming out with single stock names today. What do you think about that? To add to all the overnight trading available out there on Robinhood, on Interactive Brokers.
I don't think it's going to be that well received. I think most people trading equities are trading them out of their brokerage account. I mean, maybe you got to get a futures account for that, but there's plenty of liquidity overnight in all these names. I don't think we could take a look at it tomorrow, but I don't think it's going to do too well.
Why would I want to trade that when I'm looking at Kalshi right now and I can trade the average price of a Chipotle chicken burrito in July 2026? So just for the record, Kalshi right now, the odds for the Fed maintaining rates this week is 80%.
Oh, so maybe there's an arb. Maybe there's an arb between Fed fund futures and that. Seems like there could be. We'll take a look at that when we get off the air, and maybe do something there. But I think we should wrap. A lot to talk about. Who does anyone report tonight?
I just had it pulled up. I don't recall off the top of my head.
I don't think any significant.
All right, so we'll get into it on the earnings on Tuesday night into Wednesday. I wish you guys a great trading day and enjoy. Thanks.